All right. Good morning, everybody. So it's a new week, and I said let's kick this off with fireful videos, fireful lessons. Um, I would be dropping more like I'm going to be teaching on some of the blueprints I look out for every single day before I take trades. before I personally take trades, why certain things happens, and so I'm just going to put up the blueprint. So this is what I'm saying. Drag your ears carefully as we go through this analysis together. So I'm going to be starting with boom and crash, probably move to volatility, and then of course forex later on. So every day when I am awake, the first thing I do is I pray. If you're Muslim, you pray. A Christian, you pray. An Adventist, you pray. It is very necessary because it makes you have some level of concentration and then keeps you in a calm disposition to actually look at the charts more focused than when you just wake up and the next thing you are trying to dive into what you have for the day. Trading over these 10 years now, trading comes with a lot of experience and comes with so much concentration if you really need to pull out the money from the market. So the first thing I do, which you must do, is pray. All right, commit everything into God's hands. And there are things you just find out, there are things you just see, which on a normal day you may not be able to see them effective, but we have something higher above which can always guide us into making proper decisions. So, and then we move into the blueprint properly. So, the first thing first I do is break off market structure. Anyway, let's go to the chart and have some major fun. So, let's look at volatility 25. I know yesterday I asked you guys what are some of the things you would want me to do regarding like some of your concerns in trading. And so some of you said, we want to grow a $10 to $200. Well, we want to grow a $50. So I'm going to maybe do a series on that. And but if I need to be honest with you, growing an account comes with comfort. Okay, you cannot do something successfully under pressure. And I will keep saying it. One of the fastest way to grow your account is making sure that for every trade you place, you are comfortable with your lot size. Anyway, that's not the main thing or the main purpose of this video. I really don't want to dive into something else, but I definitely will come to it. So let's do the analysis first on every pair. So we are starting with boom and crash, of course. So I'm just going to start with boom 300, where I most times focus on catching spikes because it has a lot more reward than any other thing. So if you look at Boom 300 on M15, just scaling out of your charts, you know that it has been on a major downtrend. So will I be looking for a buy opportunity? Actually, I probably would have looked for buy opportunities, but in cases like this, there are less buying opportunities because we need demand and supply zones to work, right? But if you look at boom 300, let's go to the 2 hour time frame. Let's go to the 2 hour. If this is delaying, we can use this. If we look at boom 300 on the 2 hour time frame, you can just literally see a major downtrend. All right. And so I cannot even spot a demand zone to work with. So on M this M12, I'm trying to look at it on H3. Let me see H3. So you can see this 3 hours time frame. Yet, absolutely yet. Let's even zoom out. There is no, let me say, for those of you who are conversant with support and resistance, there is no support to work with. All right. The last support was at this point. Look at how far it was. Look at it. It's gone, it's gone. And so if we need to even do anything on boom 300, we need to see situations like this. uh, my chat is still trying to come up. We need to see situations like this where, now understand that boom 300 has been in a downtrend. Okay, we need to see situation like this, a change of character, and then of course we can work with something like this where it now bounces off a support and then goes up. All right. But so that's why I'm a bit concerned for a lot of persons who have been trying to force out a buy position on boom 300. It's not really going to work. Okay, it doesn't work that way. It's still delaying to come up. So let's just go to M15 on our MetaTrader and then zoom in very close. So if we zoom in very close on M15, is there something we can work with? Yes. Let's go to M5. So on M5 now you can see that there is something I can work it with, right? So let's go back to our blueprint. First things, break of market structure. And I said mark them. So what you're going to be doing is what? You mark. So when you're marking your market structure, most of you should know this, right? You do this. So let's say we have something like this, something like this, something like this, something like this, and something like this. So the main thing is you're actually looking out for support and resistance that are visible to the eyes. All right. And so we have this, right? And then we have this. Well, before that, let's make it much more neater. We had a previous support broken, another previous support broken. Now, remember, when two supports are broken, we can say we are in a successful downtrend, all right? And then we have a change of character, a change of character meaning that the previous resistance that broke the previous support has been currently broken. So, what we are going to be looking out for is like this something like this, price coming back to the other block. So the first thing in our blueprint is what? Break of market structure, which we are trying to do. You have a downtrend, then we have an uptrend trying to form. This is not an uptrend. The only point this becomes an uptrend is when you now have the second break of what? Market structure. And so you have something like this. And now if you want to take a trade, you have to ignore this because this now becomes what? Inducement, and then this. But now since we just have change of character, we are just going to work with this because this is just a single leg, and there's no inducement. The inducement would have been this full single leg, but we don't really have anything we can work with behind, isn't it? So let's work with what we have and see if we can follow the blueprint to the letter. All right, so break of market structure, and we are currently on boom 300. Don't know why this is not coming up. Okay, so let's go back to boom 100. Hopefully, it should. Trading view for Derive has been acting funny. I don't know. You can see it's still having a challenge trying to come up. Let me see if I can switch to M5 if it's going to come up. Okay, fine. So now this is boom 300. Okay, and so we need to mark our structure. All right. So we are working with what we are currently seeing. Forget about past data. So this, and now the next thing we are looking at is what? Watch out for fair value gap. I really do not have time to be going into what a fair value gap is right now. But if you look at my chart here, you can see I already have a fair value gap. It's the space in between 2 weeks, right? It is simply the space in between 2 weeks. Let's say you have a candle like this. I'm just going to be very, very fast about it. You have a candle like this, then you have another candle like this. Now, please follow me closely. You can see this, and oh, come on. You can see this, and then I'm trying to. Now, you can see the space between these 2 weeks. That is what we refer to as what? Fair value gap. Where two candle wicks do not touch each other. You can see this particular week and this particular week, they did not touch each other. Okay, so the spacing between them is what a fair value gap. And what happens is most times the market comes to this FVG, reacts, or after the FVG, and then pushes back up. So that's a quick one on what fair value gap. Most of you by now already know it. So it's not like I'm trying to, it's just for the purpose of being so sweet. So you look at what for what FVG. Now, why is FVG important? There is this rule that states that before before you pick your order block, an FVG must occur. So before you pick your order block, FVG must be present. No FVG, no what entry. All right. And so let's check. I think I have a tool that already draws that for me. But on this chart, there is actually an FVG here. We have this candle week. Now, boom and crash is a bit subjective when it comes to FVG. And then we have this also here. All right. So this is the fair value gap, and most times price always goes towards a fair value gap. It wants to mitigate it. There are what we call mitigated FVGs and unmitigated FVGs, but that's not the bone of contention right now. That's not what we're trying to study. The most important thing you need to know is why I'm saying that before you pick your order block. So let's assume this is the order block we want, that price is going to come towards react. We are saying an FVG must exist. As simple as that. If we say this should be our order block, an FVG has to exist here. All right. Because after an FVG, there is that 80, 60, 70% chances that price might react at your order block. So first, we were able to mark our structure. We are now looking out for FVG, no order block, no FVG, no FVG, no order block. So the next thing is what to watch out for inducement. And we, of course, by now we already know what inducement is. So I'm going to remove the drawings, and just for some of you, inducements are like traps. All right. And so you want to enter the market here. And so, or let me put it this way, inducement, from the word inducement, it drags you close to it. Okay, I see support and resistance as what? Inducement. Do you understand? Yes, whatever calls your attention to it is what? Inducement. And so if you have a market structure like this, creating higher highs and higher lows, right? And so you have a break of structure, you have a break of structure, and then you have another break of structure. You see this point that feels so nice that the market is going to get to. and what retrace back is referred to as inducement, or some persons call it liquidity, but I just prefer to call it inducement. Liquidity, on the other hand, is something else we'll talk about. All right. So, inducement is what drags you close to it, and it should be what avoided. It's simple. So, whenever there is a break of structure, the first structure before the break of structure is referred to as the inducement. So, we have a break of structure here and another break of structure. So this particular one, which is the first one, okay, is called inducement or liquidity. It can be subjective, in smart money concept, there are different terminologies. So just you can use inducement, you can use break of structure, any of them is fine. Sorry, inducement or liquidity rather. So the first structure that leads to the break of market structure, or the first swing. So we are saying this is the first swing before this break of market structure, and so it should be seen what as inducement, and it should be what avoided. So if we go back to boom 300, where is the inducement? This guy here is the inducement, because it is the word swing, all right, before the inducement. Now that we have successfully identified the inducement, what next? We need to identify our order block. And so look at this. This is what our what order block. And so there is an FVG before the order block, which meets the criteria. Watch out for FVG, watch out for inducement, watch out for FVG before the order block. And so back to the blueprint, FVG is coming before the what order block. And what else? What else? Watch out for liquidity. So if this was a double bottom or a double top at this point, let's assume we had something like this. Sorry, let's assume we had something like this. Liquidity areas are oftentimes double bottoms and double tops, triple bottoms and triple tops. So if we had something like this, and then we had this, and then of course we had this break of structure. Now you can see that this is a triple bottom, right? And then if the market was coming for this area, everybody thinks this is a verified support, this is a very strong support. Most times the market is going to break it, and so at this point you have what served as what liquidity. So whenever you see a double bottom, these are areas of trap. Whenever you see a double top, those are areas of trap. Most times it still works, yeah, just to keep retail traders in the game. But it is not important to focus on it. All right. So this is Boom 300. I personally would prefer to take my entry from here. Now, I'm not done. The other block must sweep what liquidity. So other block liquidity sweep. That I'm trying to say, the other block must what take out a previous candle. All right. And so then before you start talking about your lot size and all that, so for boom 300 on M5, break of structure, inducement, FVG. Now this particular order block did not sweep. Let's confirm. Let's confirm. This particular order block, which you see here, did not sweep this previous candle, and so I am totally ignoring this. As a matter of fact, I feel all this will just act as liquidity. So will I be taking a trade on boom 300? The answer is what? No. Now, so this is how I personally, assuming this particular candle swept the previous one, I will be smiling to the bank this morning. Now, in some cases, this might still work, but as your teacher today, I am trying to tell you that I personally will not be taking this trade, because yes, break of structure, everything confirmed, this, that, that. But at the end of the day, it doesn't meet my total blueprint. And so the next video would be a continuation. All right.